Man, it's been a long time. I'm really excited.
It absolutely has. And even though it just started recording live, but yeah, I'm gonna I'll end up cleaning up like any intro and outro and all that stuff. But yeah, it has been quite a while. Um yeah, how's everything been going? I guess the last couple months, really since like
Crazy, man.
May of this year. So it's been at least like three months now.
Crazy, man. Like I miss those times when we used to talk a lot,
Hmm.
like the back end of last year. It's really fun.
Hmm.
And getting to know you guys a lot more. And it was fun to go on that journey of some of those some of those runs
Yeah.
on those prices. It was really, really fun. So yeah, it's just been a crazy year this year. Just I've out of Dubai at the moment, just escaping the summer. I'm in Spain
Mm.
and then just trying to get a bit of a balance and then just going into this Yieldlabs thing, just trying to
Yeah.
build this out, like really like put a wrapper around some of our work, and
Sure.
then kind of reach out to companies, just add. I think a lot of the stuff we did in the early days was kind of
Hmm.
experimental, just kind of
Yeah.
community building, just meeting people, connections, and I think we've really
Hmm.
boiled it down now to like a core nucleus of like trusted people and kind of seen who's stable across various type of market conditions,
Hmm.
and then kind of yeah just working with those people and really trying to add a lot of value to the communities and basically just help people with sound advice. So it's been, and work with companies too from a
Hmm.
professional standpoint and like a business
Hmm.
to business standpoint, and
Hmm.
yeah, just trying to do something different. So it's been really fun.
Yeah, yeah, that's awesome. And just for some just background for anybody new that's tuning in, because I am gonna post both the podcast and the YouTube clip of this into outlets like LinkedIn later, where there might be an opportunity to get others watching that are kind of outside the usual communities on crypto Twitter. But yeah, Kevin is very well versed in the space. So I've known, as Kevin was mentioning, there was a few of us that met quite a while ago. I'd say it's been at least a year and a half, probably, from some of the initial podcasts we had in the very early days of Celsius. So there's been a lot of growth since then from some of the core community members at the time, just across all of crypto Twitter. So yeah, Kevin's very familiar on the macros and very good when it comes to the risk management and using different tools in the market. Because I think that's the big thing for people coming in is, people, it's a combination of, depending on like the types of investors, some people, are going in with the intention of trying to invest in an asset to try to multiply their money or use other tools that give them stable and secure yields that just gives them stability from month to month, where they don't have to worry about all the volatility that's going on in the market. So the yield aspect's huge. I kind of think of, when it comes to different tools, I just think of, like, for example, a chef in a kitchen is going to use different tools depending on what they're doing, what they're making. And I would say with a lot of investing, it can be pretty similar with where crypto is going and having opportunities to take your money and then generate yield on it. Something that like humans haven't really had this type of exposure to until the birth of all these networks in crypto. So in terms of the yield aspect of it, when was the, I guess there was, of course, Celsius with their ERC20 token. I guess the yield aspect for crypto and using your money to generate this passive income. When would you say was the first time you first like saw that opportunity, and then maybe even like learned of different ways to do that besides just having, let's say, a volatile ERC20 asset?
Yeah, so I think like you said, I think that's a great summary of kind of what happened with us and kind of the way we've all developed as kind of just investors and kind of matured, I would say, and the way that we and our delivery to the audiences as well. So when I first and kind of yeah, our techniques as well, where we can now take risk without crazy we can take speculative risk without actually putting the risk on yourself. So there's all these different techniques. So 2017 late back end and early 2018 was when I found kind of yields as a category, or as a concept, and it was just a concept. And I think Celsius, the white paper, was the first time I saw it. Obviously, there was probably a lot of white papers about other projects around that were kind of promising things, but they were the first, even before any of the DeFi stuff, that kind of just brought this category to the masses to say, okay, this is what we're going to do, this is what we're going to build. Yeah, it's got a speculative component as well that's kind of woven into the business model somehow. So that was when I first stumbled across it, and I would never have even dreamt that it would kind of turn into what it is now, and kind of the opportunities we have. And I kind of had a small vision of kind of, how this would work back in the day, but I wish I'd have, had the foresight to kind of to understand of kind of these TVLs, these total lock values now, or total value locked in some of these protocols is crazy in the billions and billions. I don't know what DeFi Pulse was at its peak in the bull run, up to 65K on Bitcoin, but I think it was like 85 billion, which is absolutely ballistic. That's just in DeFi alone. So yeah, just as to watch this, the opportunities, it's like the rebirth of yield, because yield was around for our parents and stuff, and then obviously that all dropped away when the velocity dropped away in the traditional markets. The lending and borrowing collapsed, and then that finally capitulated before the pandemic, and then with the pandemic, the rise of DeFi, and before that, it's been really fascinating to watch, and just kind of looking at this whole thing now as like a holistic category where we're not just focusing on one company and saying that's going to be the be all and end all. And that's what we try and do at Yieldlabs, so people can kind of follow us, join our community. You're part of our community, and you do some speaking for us too, and we can just try to show people another option if they don't want to take these speculative risks only, or they want to dip their toe in and just with some stable coins first. You can use this. If you've got a massive portfolio of $5 million, then you don't want to be risking that whole thing too, so you can just earn 10-20% of your dollars as well. And there's just multiple ways to kind of manage a portfolio and look at it as a revenue stream rather than a top line number sometimes. So yeah, that's when I got into the category, and yeah, I really enjoy it, and it's evolving, and there's opportunities every day just coming up in terms of speculative farms, if you want to go that crazy way, or you can take much safer, the centralized platforms which offer a level of security and insurance. And then there's DeFi savings options too. So lots and lots of different options.
Yeah, absolutely. And the work that Kevin's building around Yieldlabs, I highly suggest, especially if you're new in this space. There's plenty of video the Yieldlabs community has uploaded on. I believe the first few calls are on YouTube, and then Twitter's a really good place. Telegram. There's going to be links for all the ways to get active in the Yieldlabs community provided in the descriptions of this video and anywhere this is posted, so it's easier for you guys to check it out. I've personally known Kevin for quite a while. He's been a very big force around Celsius, and from my viewpoint, a very large part of the success that they've had. I don't think people really understand how important that those initial community building days were in the very early stages of Celsius. I mean, a lot of crypto Twitter, those community calls on Sundays, that is, from my view, the community aspect of it is one of the most important and critical parts for the success of any DeFi based project in the space today. So it's going to take time for users coming into the space to kind of figure out and understand even the social aspects of cryptocurrency, because we see almost a unification of different so-called democracies on the internet. And from my viewpoint, the Celsius community represents one of those democracies on the internet through crypto Twitter and other social media outlets. And it's definitely been a very thriving community. And I do recall, Kevin was one of the earliest in that community and set up a lot of the engagements that led to where the community is today. So, and then even on the yield side, because this is a very, in my view, it's underrated as far as how many tools a user has, especially even with the risk management aspect of it, because personally, stablecoins are awesome. If there's money somebody has on the sidelines that they need some time to evaluate how they want to invest it, or perhaps you use it as float and collect yield on that. That's been a very thriving part, I guess, of the entire crypto industry. So I guess from the standpoint of like stable coins, is there anything I guess you look into specifically? Do you have like any favorites, I guess, when it comes to some of the stable coins, or are you still kind of exploring the different options as far as yields based on the stable coin that you're using, and then perhaps some of the protocols that the stable coins have access to?
There's such a range now, right? So that it was all Tether was the first stable coin, and I think people don't give Tether credit. It just gets a lot of FUD, and I think it's a huge success, and a lot of people laugh at me when I say that. But in terms of like the value it captured initially, and just it still maintains its position up there as the top stable coin now. So obviously over time, it's the same with the community work you talked about before, right? It's always the one who comes in first, who builds the community and brings everyone together, that kind of doesn't get the kudos, and then everyone comes in on the back of it, and then kind of just replicates your work, or just like, oh, this is easy, I'll just jump on and improve that work, and kind of and that's that's a compliment, really. So I don't take that personally, but it's kind of that's the thing with Tether. Everyone's bringing out algorithmic stable coins. You've just seen USDC was a dollar backed stable coin, and now it's a dollar and collateral backed stable coin. They've changed their position, whether that's to suit the regulators or whatever. I've not dove into that one too much, but the algorithmic stable coins are fascinating as well. There was DAI, and then that ended up kind of with a centralized component, which is the USD backend of that. So that was not fully decentralized, and now kind of you see like UST, which is the Terra stablecoin, which that ecosystem is built around, is an algorithmic peg. It's not pegged or backed by any collateral. It's kind of incentivization via arbitrage to maintain that peg, and that's an insurable thing too. So I think it's just like this experimental and kind of having exposure to all these things. You look at MStable, which is a basket of currencies behind a stable coin. So it's just really cool to see all of these different options, and then the different yields associated with them, the different ecosystems, the way that they can be transported and wrapped and then put on Ethereum and move around. And yeah, let's see what gets regulated out of existence. Let's see what's left at the end. I think for me, it was this cycle. I remember talking about it a lot. This is one of my biggest concerns was Tether. I thought, if the regulators are gonna really like come in hard, and they're gonna smash Tether to pieces, but they kind of gave it a slap on the wrist and said, okay, yeah, you made a lot of mistakes. You tried to fix the mistakes. Here's a fine. Move on. So I don't think the regulators are gonna take any of these out of existence. Maybe, and even if they want to take the non-collateral back ones out of existence, then good luck. I don't know how they're really going to do that. So it's fascinating. Just even just on base stable coins, we're not talking about speculative assets. There's kind of a lot of discussion and kind of opportunity. And to basically use these stable coins to basically mint risk on assets via a stable coin is fascinating, really, without you're not even taking any risk. And then you're accumulating a position in an asset which is risky. So that's fascinating from like a portfolio perspective as well.
Absolutely, yeah. The Tether, the evolution, and granted, in the past, a lot of the tether FUD too. I mean, even when it did occur, I mean, a lot of it was definitely justified at the time when there was those instances of tether FUD, and you're absolutely right as far as it was a slap on the wrist, which I'm perfectly fine with, because it just gives users more access to stable coins in the market. And I've noticed, like, even with the top 10 cryptocurrencies today, stable coins are starting to like kind of take over some of those spots. So it leaves less and granted, there's always going to be, like, if you look at like the top 10 excluding stable coins, you'll have like a list there. But stable coins like USDT, as Kevin mentioned, that's listed is number 3, I believe, on the rankings, and then USDC is now displacing spots in the rankings list. I know Binance USD is pretty high on the list. There's of course UST that's yeah,
GUSD.
GUSD. So there's going to be we're going to have this very nice liquid market of various options of these stable coins, and it's and I kind of imagine, like, since this is where a lot of the yield is going, there's this, I kind of view it as like this big arbitrage in a way, because as Kevin was mentioning, as far as the yields dying off in the legacy markets, and then now there's all this opportunity right now in crypto when it comes to yield. There's this really massive like arbitrage right now when it comes to the yield aspects of it. And I agree with a lot of the points he's making as far as, you know, regulators and the difficulty of them trying to shut down, you know, some sort of stable coin that exists if there's a market for it on these distributed decentralized networks. Because it seems like a lot of the disconnect, and especially with the infrastructure bill that's taking place in the US, is I think from their worldview, they're looking at it as some sort of like central source that they can directly attack and like shut down, let's say, the entire existence of like these various options people have in crypto. But I think over time they'll start to learn that it turns into a game of like whack-a-mole. Basically, is once you go after something and then 10 other things start to pop up. It's absolutely brilliant. So I guess in terms of the political aspect of it, are you following much of what's going on, I guess, with like the infrastructure bill in the US, and have any thoughts as far as whether that may or may not like affect, let's say, yields, specifically maybe around like stable coins in the market?
So honestly, I'll be straight up. I haven't followed that as closely as I should have, just because I've just been so busy with life and stuff. But in terms of like, I get the gist of what's happened and what's been said. I just haven't dove into it too deep, and it's just kind of like, it's just what can they you know, they regulate the centralized offerings, and the decentralized offerings flourish. I just think there's no, you know, whatever way they want to do it, and they want to try and shut down crypto or regulate or restrict crypto, I just think they've got a losing battle on their hands. And I think, you know, these people are naive and old, but I don't think they're like completely stupid. They do realize, I'm sure they have advisors that tell them, they're like, you know, that's not really going to work. So I don't think I don't really see too much risk. And like, even if you just look at things like the Terra ecosystem and what's being built there, offerings like that, you know, I'm not saying that's the best platform or anything, but that's just an example. You can't shut all this stuff down. You can't shut stable coins down that have no collateral behind them and that are pegged to the dollar in their own mechanism. You can't stop all these things, and you stop one, another one pops up. It's just, you can't put this back in the box really now. So we just have to pay attention to what's going on. I think the yields are going to maintain for a while, just because of the friction of trying to onboard it into crypto. There is a lot of capital sloshing around, but there's kind of still not enough. So over time things will dilute, but I think there's plenty of opportunity now. And we saw, like, even with that big pullback recently, kind of just the popularity of like how much of that capital stayed in crypto for this time opposed to last time. You know, if this was 2017 and that type of event happened, all the capital would have just flushed back out, because there's nothing to do apart from buy and sell. Now we have multiple options to run a business in terms of yield generation and stuff. And this is what I kind of teach people, a lot of this mythology, you know, treat things as a business, have a balance sheet of assets, whether you have stable coins or speculative assets, you know, earn transaction fees, do all these different things, run your thing as a business, and then you produce a revenue stream at the end. So you're not going to be able to, the people are always going to have options, centralized or decentralized, and there's always going to be ways to interact with these markets for the foreseeable future. So the opportunity is now, before kind of wrappers are put on, and then, you know, from the tradition, you know, companies are going to put wrappers around these products and then offer them out to clients in a traditional way where they don't see the crypto element in the background. So do it now and learn and gain exposure to these things now while the yields are high and the rewards are good.
Yeah, absolutely. And I really like the comment there, treat it like a business, because I think what a lot of just I would say I would say this is mostly, maybe, if we're looking at somebody new that's coming in specifically, that's getting their first taste of crypto. Um, when it comes to, like, let's say, treating something like a business, it may not be necessarily obvious, like that being like an optimal solution from the start, because you're looking at somebody, for example, that's like 100% all in on like altcoins or something like that, where you're basically at maximum volatility in the market. So in the instance, for example, where Bitcoin did top out around hit the local top around like 60 to 64K, there's a lot of altcoins in the market that haven't recovered back to their previous highs yet. I mean, there's still plenty that are down 50 to 60% from their local tops. And that type of, when it comes to treating things like a business and having a balance sheet, generally what you see over longer periods of time, perhaps like a 2 year period, which is a lot in crypto. It may not seem like a lot for, let's say, legacy investors, but when you start to look over the course of years, those that have very good risk management and using kind of that methodology of thinking of it like a business tend to do much better long term than those that put themselves in the exposure of like maximum volatility, because it's, you have all these tools in the market, and my thought process is like, okay, you have a few tools in front of you, and if you only know how to use one tool, it's just not making, in my opinion, the best use of your assets, because there's even a lot of opportunity. This is why I really like the work, with the Yieldlabs, and Kevin's bringing up around yield. There's a lot of emphasis on the stable coins, because there's so many ways you can even reinvest that yield. Like if the person has a steady job, they can reinvest that yield into like speculative picks in the market, or they can keep like hoarding yield to compound more and more yield each month. So there's so many options, and I think only having one thing that you're relying on exclusively, from my view, it's an opportunity cost, and you're just not. It's the market is so early right now to understand how to use some of these other tools, and certainly the arbitrage is there, because over time, over a 5 to 10 year period, the yields we see today aren't going to be as good, let's say, like a decade from now. So we're kind of at the early stages of this, where you do have the most opportunity to gain higher levels of yield, and then just knowing the tools that you have in front of you that allows you to build up your assets. So and even that run up to 64K, because I specifically recall, Kevin and I and a few others we were actually in a call sometime before that local peak, and I remember specifically Kevin pretty much hitting a bullseye on that, and being very, very right as far as what happened in the market shortly thereafter. So I think the important thing is, when you're seeing these moves play out over longer periods of time, I think it's a good learning experience for everybody, especially anybody that's just coming into the market today, because there's certainly trade-offs depending on what tools, again, that you're using, and really when you're getting into the market, because you have to also realize Kevin was here in the very early stages during, let's say, the depths of the bear market, where the risk levels on the price chart were far, far lower on assets you could buy in the space. And kind of the reality is yes, there's upside left in crypto, certainly, but the risk levels on the price chart even today are significantly higher relative to where Kevin or a lot of us were in during those early stages. So over time, like a lot of the experienced investors in this market, they start to get familiar with the macro moves, and the patience ends up playing out rather favorably for them over longer periods of time, though it may not be immediately obvious. Because I would say the reaction, and it's really hard, I think the natural reaction is 100% bull narrative only, and then that, because 100% bull narrative only gets the most engagement in terms of like likes on Twitter, and then that just being a very easy way to draw in an audience. I think it could also be very devastating if getting in at the wrong stage of, let's say, the market cycle. So I guess from your viewpoint, because this is really hard, because like crypto in general is very it's because of the amount of upside you could get. It's just natural, like psychologically, everybody wants to get, let's say, maximum like maximum gains. But
Max
the thing,
gains, yeah.
yeah, max gains. But the thing is, like, even if you use like 20-30% of your portfolio, like depending on the percentages you're using, at the end of the day, it gets to a point where if you're smart about how you're managing your risk, it ends up not really mattering over long periods of time. And generally, I've seen more failure in like the 100% maximum gains scenario, because you're projecting on an absolute possibility, where markets just don't tend to work in absolutes. There's a range of possibilities that can happen, and then the reality could be so many different things. So that risk element and being smart about the exposure is very I think it's a very great way to go about investing in this space, and just understanding, you know, your risk relative to where you're entering the market. So I guess in terms of the Terra ecosystem and what's taking place there with like UST, because I believe that's over on Cosmos. So it looks like now there's all sorts of DeFi activity that's starting to, in addition to like Ethereum, start to grow on some of these other networks. So in terms of getting access, let's say, to the Terra ecosystem, did you have to do anything as far as like getting familiar with like different like wallets or something? Like, because I believe on Ethereum it's mostly like MetaMask, and then perhaps for some of these other stable coins. I'm looking into Cosmos from a development aspect. I know there's a lot of tooling being built up around that. And I haven't looked. I know there's a couple wallets. And are you kind of using certain wallets to like access, let's say, some of these other networks? Or are you going through some kind of platform to like access some of these yields? I guess how's that experience been? Sorry, go ahead.
Yeah, so basically a lot of the Terra assets are wrapped on Ethereum, so you can kind of get exposure there, and you use the bridge. It's like bridge.terra.money, I think it is. So they have their own bridge. It's very easy. You just kind of transfer over with the gas fees. The tokens are burned and then minted on the other side. So yeah, sometimes obtaining something like UST is the most difficult thing. You know, I was trying to buy some, I think it was about 2 weeks ago, and the pool on Uniswap was drained. There was so much demand for it that it was just like the slippage was crazy, and I think KuCoin do it as well. So, but they're building a lot of on ramps and different things over there just to make it easy for people. But yeah, they have their own wallet structure. The Terra Station wallet as well. It's the same as the MetaMask. So you should download it. People that haven't seen it, download the desktop client. It's really good. It's like a whole dashboard that has like a staking facility, governance facility. It has all the stats and metrics and everything in there, kind of network usage, and it's really, really cool, and it's really polished, and it works really well, and the fees are very low on the system. It has in-app swaps as well. That's really crazy, like in the wallet, so you can just swap assets around. So yeah, it's easy to get the exposure to the assets that way. Get the wrapped assets on Ethereum, send them over, get them from centralized exchange, KuCoin, where you can buy the native assets, because I think they have TerraChain kind of compatibility there. On other exchanges they don't, so you have to just be careful. It's a new ecosystem, but there's just so much opportunity, and they're kind of building like a step by step kind of platform over there, I guess, where a modular platform where it's got like a savings protocol anchor, it's got like a synthetics assets on Mirror, it's got all these different components, it's got the Luna component like Ethereum, and it has you can capture transaction fees that way. And they're building the Orion. It's like a gateway, so you can basically a stablecoin bank for Ethereum assets, so you can deposit and get 20-25% there. So it's really, really nice, sweet. kind of business focused, and they have a payments gateway, Chai payments gateway as well. They're having like onboard cards and different things, and onboarding and offboarding. So they're building like a very modular business like proposition in a decentralized fashion. It's really cool. Like, and it's kind of a lot of this tech is kind of just very tech focused, and then they kind of the user experience and interface is or kind of like how it would interact with the real world is not really thought out properly, or nobody can kind of understand it. Whereas they have come from kind of like a business perspective on each module, and kind of like, okay, we need this and this and this to get adoption on this every time people buy, and everything's like incentivized so that you buy, and even like token offerings, you have to buy UST, deposit UST, and then like mine the coins almost like in a like a in like a pre-mine over and they're vested over a amount of period, so all the tokens are not just like sloshing onto the market. Buying the UST affects Luna price goes up, so it's kind of like the whole system is just like really well thought out and very logical. I like it. It's cool. It doesn't mean it's going to be the next Ethereum killer or anything like that, but it's an alternative, and it's there's going to be chains, bridges, and different things across. So it's very nice.
Yeah, that's super interesting to hear, because I know the I've been looking into the tooling around the Cosmos ecosystem, and there's a lot of development taking place on Cosmos. It's one I've had an eye on for quite a while, and I guess before even getting into like the whole the Cosmos side of things, just to be there's a difference between, let's say, the value, let's say any particular projects may get, let's say on Cosmos, versus the base atom itself. I'm purely just speaking of this at like just from an infrastructure level. There's certainly a lot of interest around different projects building onto that ecosystem, and then starting to connect. So I know Terra has been very it's had definitely a lot of success during this previous market. And there's a pretty cool website. It's called Map of Zones, where you can see kind of the topology of the network within Cosmos. It's kind of a multi-chain system, and I believe once like certain networks on there enable what are referred to as like IBC, that's what allows for like the chain to chain communication between these different networks. I'm not sure if Terra has. I'm assuming they have IBC enabled for their network, but nonetheless, like even as Kevin was mentioning with Ethereum, the intention of like, let's say, even some of these other projects and these other ecosystems, these aren't here to kill Ethereum. I would say that what I've kind of viewed them as is they're more complementary. And the reality is there's a ton of demand to use Ethereum for various reasons. There's people speculating on NFTs, people wanting yield through like yield farming or stable coins or other forms of yield that exist on the network. And at a certain point, there's certain limits that are hit, and certain things start to blow off onto other networks where there's some kind of like arbitrage there, so to say. So I viewed something like Cosmos and a lot of these other ecosystems as more complementary. You can even see it with the bridging. Like there's a ton of liquidity that's built around Ethereum. Ethereum is incredible. I mean, it's this massive vessel of like economic energy that exists in crypto with its native asset plus all the ERC20s. And then a lot of these other chains are basically helping scale. I almost think of it as like Ethereum is this massive, and when I say Ethereum, I'm referring to everything really that's on there that has some sort of economic value. There's this huge vessel of like economic energy, and then other platforms or other chains in the market are just helping scale that, and then just have easier access to all kinds of yields. And a lot of the tools, like for example EVM, Ethereum Virtual Machine, that those types of developer tools can be directly used with some of this infrastructure that's being built out on Cosmos. Now, what's not entirely clear to me just yet, and granted, it's still very early, and a lot of these questions later on will have some answers, is that at some point, with a lot of this stuff, there's of course going to be certain like security trade-offs. So that part is still, once you get into like the multi-chain aspect of things, as Kevin mentioned, there's a lot of opportunity, and then it's also kind of good to understand like the basics of the network, to understand even from a security standpoint, like Cosmos versus using something like Ethereum. There might be some differences there, but nonetheless, like it's, to me, it's very clear, like with what we're seeing, with these other networks popping up like Terra, it's helping Ethereum scale and take the load off of Ethereum and bring them onto these other networks that just make for more opportunity. So I don't think too many are even really familiar with and I think this is really just a result of, I think once people kind of have a certain picks, I guess, in the market, and this is really, I guess this more goes back to like what their long-term picks are on the market. It's very easy to get complacent with whatever your primary positions are, and then not pay too much attention as to what's going on outside of, let's say, your positions in the market. And just just to be very clear, I have my personal long-term picks, but I'm also keeping a close eye on with everything that's going on in this space. Like reading basically any of the articles put out by Yieldlabs. There's a lot of good stuff, a lot of great stuff from Kevin there. So I guess the complacency aspects, it's really easy to fall into like a complacency aspect where you start to kind of fall behind almost with what's going on in crypto, because there's honestly so much going on.
That happens a lot. Yeah, that happens a lot. That definitely has happened to me before, and I've seen it. So many people, like, kind of even when we switched from doing like Celsius centric content, and then we kind of realized, well, the whole reason I started doing all of that was basically just to kind of stimulate new people coming in and doing it, and then new people came in and did it, and they did it better than what I was doing it, and that was the whole point, to get people. It's not to create some sort of like system where I'm in charge of it and I say, look, I'm the best guy, come to me. I'd happily step away when other people come through. That's how I kind of acted in corporate when I was there. It's to get better people in your team than yourself. Better people come through, and then you kind of look at your investments and you're like, okay, maybe there's a lot of opportunity cost holding these things that I'm holding. As you educate yourself a bit more on kind of portfolio management and then when, like you say, when you look at it as a revenue stream, you're actually huge opportunity costs, because you're actually costing yourself a ton of predictable revenue. And we have no idea where this market's going to go. Probably up short term, but like 2 years time, will it still be going up? Who knows? So yeah, there's a lot of bias, and people, first of all, they don't want to like change. Humans hate change. They get this thing, and I've seen a lot of people like saying, "Oh, you should be loyal to this project." I'm like, loyal to what? Like, to a platform where you're depositing your assets and you're making them a ton of revenue so they can pay themselves? Like that, what are you loyal to? Like, if you deposited your assets in a platform or a protocol or something, like, you're already loyal. You've given them your assets. So, and you're generating, there's no need to add additional loyalty and just, bang drums and say we have to just use it this way. You're really doing your portfolio a disservice and yourself a disservice, to be honest, by just staying fixated on one thing, or rather than looking at things holistically as a category, and just having a conversation. Everything doesn't have to succeed. It's okay. Like, let's look at this, and if it fails, that's okay, right? Like, at least why did it fail? What did we learn? How can we take those lessons and make sure that doesn't happen to the next thing? Like, just endlessly looking at the same thing, either Ethereum or Bitcoin or Celsius or whatever you want to look at. Like, this, it's a really narrow-minded approach, and I think some people only have the technical capacity to be able to do that. That's a secondary thing. First of all, it's a personality thing. Second of all, it's a technical. Some people don't have the technical capability to be able to like understand what's going on and how things work. And there's a lot of youngsters in this space that made a lot of money quickly, so they don't really understand business and how businesses are built out, and kind of how things scale and regulation, and kind of how all these things fit together. So there's many facets of kind of why people would like bag hold, if we want to call it, just a certain thing. But we should always be optimist, open, and just basically the only thing we should hold allegiance to is our kind of our portfolio, and for ourselves and our family, really. Like, you should be supporting, be loyal to the people around you in terms of like connections. Like, we've never like shared the same investments, but we're always like loyal to each other in terms of friends. That's what you should be loyal to, not companies and projects in crypto. You know, they're going to change, especially the centralized offerings. They're going to change over time, whether people like it or not. They're going to get bought. They're going to get molded. They're going to get changed. There's not full transparency. You don't know what's going on inside, who's getting paid what, you know, like, so, you know, unless it's truly, truly open book and they open everything up, then we have to be honest and have honest conversations about this stuff and not baghold. You know, it's crazy to do that.
Yeah, absolutely. And that's another very good point. And before I even say this, like, you know, I will say again, like, there's certain, you know, long-term picks that I have that I will let ride indefinitely. But in terms of the bag holding aspect that Kevin mentioned, and this is where things get very dangerous if the market goes into, let's say, like a prolonged bear market. Now, you know, if we let's just say, like, if we assume, let's say, there's still a certain amount of time left in this market cycle, I think what a lot of people also need to consider, and this is really kind of reinforces even that whole bag holding aspect, is if you look at the coins in the market from 2017, 2018, 2019, 2020, 2021, the top 100 list changes all the time. And I think people have this kind of this delusion that, like, it's very easy to get emotionally attached to whatever your coins are, and then not and then you don't really pay attention to what else is taking place in the market, because, you know, with these smart contract platforms and with the space getting bigger, data is moving faster. The communication on the internet's moving faster. Communities are going faster. So we're starting to see higher, like, more and more levels of, like, growth taking place in the space. And perhaps at some point it gets to a level where you have to start picking certain ecosystems to follow, and then perhaps you know, link up with other individuals that are following other ecosystems to understand what's taking place there. So we're getting into, like, a very experimental stage right now in the market in general. And that's why, in terms of, like, the portfolio aspect of it, you know, when I look at my portfolio personally, like, if something happens in the market that, you know, from my viewpoint ends up, you know, justifying a pivot or a change in my portfolio, I will do it without, you know, really second guessing it. It is what it is. Like, the things are going to change, things are going to evolve. And with what we've seen historically in the space, there's already data that proves that the coins in the market end up changing drastically from year to year. And over time, we will have some consolidation, but, you know, even the two networks today, I mean, really the only two networks right now that kind of have a good staying power, at least right now, you have Bitcoin and Ethereum, of course, and then everything else is kind of a battle from there to solidify their position. So the yield aspect on the stable coins is neutral to a lot of that's taking place. And that's something that's going to be very powerful, especially for individuals that take advantage of that when the market isn't, let's say, in an uptrend per se. Because, like, generally, and I'm not saying we're in, like, I still think in the grand scheme of things, we're just in a longer market cycle. I think we're going to have some answers as to, like, the stock to flow versus the lengthening cycle theory later this year. But the next real bear market is going to be it's going to be very important to understand, like, even the stable coins, getting used to that even today. Like, just start getting familiar with the tools, practicing the good risk management, because that's going to be an opportunity for you to collect yield on just an asset that's neutral to all of that. That gives you some time to figure out, like, how you want to position your investments in the space that's changing from cycle to cycle. So I from my view, I think a lot of the responses, like, and this is true for every crypto community, and again, I have holdings that I believe in, but at the end of the day, it's going to be the test of time that determines what's going to end up ultimately staying in this market. And certainly the yield on stable coins is something that is a very important aspect in terms of my portfolio, because it's just an opportunity for me to have, let's say, some assets that I'm just collecting and perhaps allocating. Like, that yield at some point will get reinvested into the market, but that's something I can more patiently and more methodically determine, as opposed to just kind of firing a dart into the market, and then
Yeah.
hopefully not getting, and then just avoid getting caught at like the wrong time.
Yeah, there's a couple of things you talked about there. Like it's the first, just to finish off on the last point. It's like
Mhm.
we have to acknowledge that like these coins and projects and whatever tokens, a lot of them, what most of the major like moves that I've seen are narrative driven. It's all
Mhm.
narrative driven, right? And if a
Mhm.
narrative wears out or becomes normal or not so shiny, and the herd, the way it moves, around this ecosystem, and the way that the capital flows, is generally on a narrative. And if
Mhm.
that a narrative typically only lasts once, you don't usually see a double narrative.
Mhm.
Ethereum has multiple narratives, right, within its overall narrative. So it has, it's
Mhm.
kind of like, oh, it could be something. That we had the ICO narrative, and then it's kind of like,
Mhm.
okay, like ETH2 narrative. And then you can see that like the waves within this, but unless it's
Mhm.
the overall platform, most of these tokens they don't. And you can kind
Mhm.
of see with some of them that we've been talking about previously that the kind of narrative runs out, and then
Mhm.
kind of the interest and the volumes and the kind of like capital flow runs out. So, and then kind of like you say, like, so once we acknowledge that, then yeah, using the tools like you mentioned is kind of important.
Mhm.
And most of us came here, like, if we really break down, like, what did we come into the space for? Most people came here for like financial freedom, I would say. Some
Mhm.
people just short term, short sighted, and just wanted, some material items and new clothes or a watch or whatever it was.
Mhm.
But most people, I would say, if you really broke it down and said, right, I can give it to you now, what is it you want? They would take the I don't want to go to work anymore and bring that revenue stream in and that predictability. But what we actually see is that most people just trade the opposite way, or they
Mhm.
completely like act in the opposite manner. So it's just
Mhm.
like, so they're all going for max gains. None of
Mhm.
them are going for max revenue and like, let me get out of work. And they end up getting the wealth and just giving it straight back, because a lot of
Yeah.
these things aren't backstopped, and then they lose
Right.
it. And they actually had like $2 to $4 million. I've seen people, and then
Mhm.
they drop it, $5 million. I've seen people. I've seen people $6 million, and then they just turn it into two. And I'm like, if you'd have just
Mhm.
converted like 60% of what you had into stable coins or some less volatile asset, you could have had like 50K a month, and
Yeah.
you'd have never had to worry about
Right.
anything ever again, like,
Yeah.
so. Yeah, I see this behavior all the time, and this is what we try and
Yeah.
do at Yieldlabs. It's not about spoiling the party and say don't buy
Mhm.
speculative assets, because of course buy speculative assets, especially if you haven't got much money. Don't
Mhm.
be reckless, but you want to increase that significantly in crypto, you can do that. But it's
Mhm.
about training people, like, once you get that wealth, let's say you make 100 grand or 50 grand or a million, what are you going to do with that million? Like,
Mhm.
you don't know. If you don't know how to manage it, you're just going to go and buy another ton of altcoins, and eventually
Yeah.
you'll get caught out in the cycle, and then you'll lose
Right.
60% of everything you bought, if not
Mhm.
80 to 90% of everything you
Mhm.
bought. And then you end up with back in the same place where you got like,
Mhm.
you started with 50 grand, you end up with 200, you ended up with 600 grand, then you end up back at 200 grand. And at
Mhm.
200 grand, you can't really, that's not, when you turn that into a revenue stream, you kind of like want more. Um, when you really had 600 grand, and that was like an insane revenue stream you had if you'd have just converted it at the right time and not got greedy. So it's kind of giving people this mindset of, here's
Mhm.
an option if you do make it, here's an option if you
Mhm.
don't want to take risk. And
Mhm.
then everyone who wants to take risk, that's fine, right? Taking
Mhm.
risks is what we all do each day. So
Mhm.
I think it's like a whole discussion, and we really try and plug into other communities like yours and Charlie's and Miguel's, and just like complement, kind of give people outlets to say, um, when you get that crazy amount of money that you're probably going to
Mhm.
get, like, how are you going to act? How are you going to think? Like, how are you going to run it as a business? How are you going to add assets to the balance sheet that actually yield for you? What's the point of having an asset there that
Mhm.
does nothing? And it's just
Right.
opportunity cost, and it's not moving as much as the
Mhm.
market, and it's not outperforming the market, and you're not
Mhm.
capturing the transaction fees, and there's no network growth in that because the narratives run out. So it's kind of, that type of mentality, and I
Mhm.
think it's very well received. I see a lot of people, especially like high net worth people, come to us all the time.
Mhm.
They want
Mhm.
help. They're like, I want
Yeah.
exposure to this asset class, but I don't want to do all this crazy stuff that all these YouTubers
Mhm.
are telling me. So, like, how can we have a sensible conversation? How can I earn 12% on my money?
Mhm.
That's good enough for a lot of people.
Yeah.
You got
Right.
20 million, 12%.
Mhm.
It's a lot of money, right? Like, and a lot of
Yeah.
people have 20 million, 10 million, 5 million, and they
Yeah.
want to like just put this to work. So,
Right.
that's a nuts revenue stream when you start to talk
Mhm.
about these big numbers. And if you can
Yeah.
keep this mindset and then just like until
Mhm.
you make those millions, and then when you've got those millions, then you can start to apply these things. And it's all dynamic as well. Things change all the
Mhm.
while. So this
Mhm.
is just something different that we kind of offer. And the people that have capital that's doing nothing in the bank, it's an option to kind of monetize and create that
Mhm.
as well. A
Yeah,
revenue stream out of that.
absolutely. The revenue stream, and I'm gonna even reinforce it again, even back to the case where somebody had the opportunity to gain like $50,000 a month just in passive income. So that today, like if we even just look at the prices in crypto, they would be accumulating. They would have the option to even convert that to like 1 Bitcoin a month, and most people, let alone can't even own, let's say, a single Bitcoin, and they have an opportunity to get a Bitcoin a month, and then that's 12 Bitcoin a year. So, I'm completely in agreement as far as the whole revenue stream aspect of it. I would say the reason why like a lot of wealthy individuals stay wealthy is because they understand the risk management aspect of it, and they don't want to take $20 million and then have that wiped out to like 3 to 4 million because there's like a 70 to 80% drop in the market. And also in crypto, and this goes to real bear markets, like we're still, we could still be within, again, like the greater macro cycle, but in the next real bear market there's going to be a 70 to 80% drop, and then there's going to be another 70 to 80% drop relative from that point. So people also need to kind of realize that even if the market drops 80% and you enter, the market can still drop another 80% relative to your entry point, and then you end up basically being just as wrecked if you get in at the wrong time. So the revenue aspect of it and the revenue stream to me is very I'm basically a very strong proponent of that as well, because you just even broke down the numbers. $50,000 a month, that's a Bitcoin a month. Like why be greedy and
It's a
sacrifice
ridiculous
that?
amount of
Yeah.
money. It's a
Yeah.
ridiculous amount of money. Like, and I'm not saying
Hmm.
everyone can get to this, but you
Hmm.
know, 20% on whatever equals that, right? Like, so,
Hmm.
there's a lot of people that have 7 figures, a lot of people have 6 figures, a lot of people have 5 figures, a lot of people have 4 figures. So whatever it is, everyone starts out with that figure eventually, and you just build it. And most
Hmm.
people that hit a jackpot in crypto, most of them, they didn't do it with like a crazy amount of money. This is what you need to remember as
Yeah.
well. People like, you only ever, if you're going to hit a jackpot, which is actually very very hard to do. So like
Hmm.
Hex is a jackpot, right? That one's gone up significantly, right? You
Hmm.
only have to spend 5 grand, 2 grand, 1 grand, 10 grand, right?
Hmm.
And then if you caught that wave all the way up, like God knows what that move was, but
Hmm.
you've now got millions of dollars, right? So not applying that crazy amount of capital because you never needed to, because the opportunity was that big that you
Hmm.
didn't need, you risk managing it basically, as you said. And
Hmm.
I've hit a couple of decent wins, and
Hmm.
I'm very proud of the fact that I didn't deploy crazy capital on that. I saw
Hmm.
an opportunity, I put a very small percentage in, and it turned into a decent amount of money. So you have to be happy with like not trying to make this max, because you're always going to feel like really bad, or I didn't get enough, or I haven't made enough,
Hmm.
or I didn't buy this token at this reduced
Hmm.
price. It's almost impossible when you look at it,
Yeah.
like what it actually takes, the ups, the downs,
Hmm.
all this stuff. There's very few people that really convert something from low to the 80% of the top.
Hmm.
Um, so
Hmm.
yeah, just looking at the revenue stream, and when everyone has that meaningful amount of money, and to be honest with you, for the majority of people I see in crypto, I don't see that
Hmm.
many people living lavish lifestyles. Most people in
Hmm.
crypto, they sit at a keyboard all day, like
Yeah.
me and you do. They
Yeah.
live in a bedroom like you've got in the background of what you do. I live in a
Hmm.
small place here,
Hmm.
and they don't have, they have minimal outgoings. They spend a lot of time on crypto. They have, they're not buying all Ferraris and different things. So you don't
Hmm.
even need that much money anyway. You only need
Yeah.
like $2,000 a month, and then you're already
Right.
pretty
Right.
much paid your bills and got some
Hmm.
left. So if you got five
Hmm.
thousand dollars a month,
Hmm.
like what? Now you quit your job. You got ten
Hmm.
thousand dollars a month. Now you got
Hmm.
more money to invest in the market. You got twenty
Right.
thousand dollars a month. You're laughing. You got fifty
Hmm.
thousand dollars a month.
Hmm.
You're investing 90% of what you earn back into the
Hmm.
market, and
Yeah.
then it's ridiculous from that point, right? So
Yeah.
that's the way to look at it. But people just
Yeah.
don't want to look at it this way. They want to just hit, oh, they've got a number. They want to hit the number. If it's 1 million, 2 million, 1.5, 5
Mhm.
million, 10 million. It's
Yeah.
a meaningless number that you're never going to hit.
Yeah, the number game is, and it even goes back to the whole looking at things in an absolute context, because like again, yeah, as Kevin mentioned, the number itself it doesn't mean anything. And there's also kind of the realm of possibilities that play out in the market, because there's enough, I would say, data at this point. Somebody could kind of project, what could constitute as like a big win in the market. And as Kevin mentioned, like the really big wins, and even even my position, which like I'm a very strong proponent of Hex, but at the time when I put money into it, it was maybe somewhere between like 5 to 10% of my overall net wealth at the time, which was actually even high. Like that temper, I think it was close to 10% at the time. Was from my view, I was like, all right, well, I see opportunity here. I'm going to put a little more into this one than I normally would, and then it ended up turning into a lot more. Like it turned into like a substantial amount of money, but I didn't expose myself to a lot of risk doing it. And I noticed that the mentality with, and this is where like a lot of the maximalism is created. And I think it's also kind of dangerous for perhaps investors that hit, let's say, certain jackpots in the market. Unfortunately, like there's going to be people that they pick the right plays that end up sustaining over long periods of time. But it also creates this. It also creates basically a maximalist personality in all sorts of coins, because they go all in. Their entire life is dependent on that one play, and if that ends up failing, then they basically back to square one. And there's going to be scenarios where certain, like over the course of time, we're going to have a better understanding of what ends up surviving long term. But the whole point is, like as Kevin mentioned, is you don't have to take on your entire portfolio as risk on into something that's basically a very, it's either you hit it big and like you make insane amounts of money, or like you end up, it's the whole thing where statistically, if you look at the patterns in the market, most people end up failing when it comes to, let's say, they're placing their bets in the market. And then that's why the whole, the idea where you invest the percentage at the right time, and then that can turn into a lot of money. It removes all, like the vast majority of the risk off the table. And it's a very rational and smart way to go about it. And this is why, really big investors are successful, is because they are managing their risk. They're not rolling their whole stacks in. And quite frankly, like I'm saying this for every single crypto community, like the large part of like every crypto community that I've noticed, it's basically a roll in, all in into this one play. And this is basically the ultimate winner in the market. And they're forcing themselves in that position, essentially, to that creates a lot of the maximalism. And then even when they do, let's say, make a lot of money, it's the whole, the whole learning and training yourself with discipline on managing risk. They haven't learned that, so they can still at some point make a lot of money, and then, as you mentioned, they then have a lot of money, and then they lose like 80 to 90% of it. So it's that
Crazy.
whole, it
It's
is
devastating.
absolutely.
It's devastating.
Hmm.
And they just don't realize what they had because they don't have the mindset, and they
Hmm.
trade on emotions in terms of what their actions. And
Hmm.
it's just crazy. Like this whole thing is like a mindset game. And like one of like, I noticed that with you straight away. Like even when our first early conversations, like you were just talking about risk and like, oh, you're just never trying to get these crazy. You're never trying to get these crazy numbers. Like every time I talk to you, you just want to make good percentage gains or risk managed positions. And I think people like me and you, we'd probably feel even worse if we did something degenerate and it paid off. I think we'd feel stupid. I think that's kind of our mentality. We'd actually feel embarrassed, and we probably wouldn't tell anyone if we just went like on some stupid farm and just did
Hmm.
something and we made a load of money. I wouldn't be
Hmm.
proud of that.
Hmm.
That's not something I'm trying to do. And I see a lot of people doing it, and I'm just like, you're wasting your time and your energy, and your expression of how you see the
Hmm.
market is that. Like this is the
Hmm.
biggest opportunity of our lifetimes, like bar none. There never will be another opportunity like this, I don't believe, in our lifetimes to
Hmm.
like create generational wealth, and you're gonna waste your time doing that. Like, is
Mm-hmm.
that how you really, that's what you think of this market? That's
Mm-hmm.
how you're going to express yourself out here, like in that manner? I'm just like, that's just pathetic, really. Like, because
Mm-hmm.
you could just do it so well, set up an entity, think about things properly, have some speculative bets in nice sizes, increase gains here, have a revenue stream here, buy some stable assets as well, buy some Bitcoin, buy some Ethereum, but
Mm-hmm.
like do some staking, yielding. You can do everything, right? And do some hex, put some stakes out, whatever you want
Mm-hmm.
to do, right?
Mm-hmm.
Whatever your expression is, but people just don't get that, and it's the ones that can kind of express what they and verbalize what they're trying to do and what their position is. They have a plan from A to B. This is where they want to
Mm-hmm.
go. This is how they want to do it. This is the value they want to take out the market, and this is what they want to learn. They're the ones that do well and commit at the same time. They have to like really
Mm-hmm.
put the work in.
Mm-hmm.
It always works, like the slow, steady approach, and then professional money managers themselves in the end because they're able to manage their own portfolios, help friends
Mm-hmm.
and family, and it's like that's the opportunity. Work for a company, do like all these cool things, just getting this
Mm-hmm.
money and running away with it. Like, what are you going to do with it? You're just going to
Mm-hmm.
end up smashing it all away, and then like
Yeah.
you've got your own head left at the end, and you're just back to square one.
Mm-hmm.
Like people like us, we want to try and just pass this on to other people so they can do it, and like really
Mm-hmm.
just like upskill people and kind of give them
Mm-hmm.
the tools, the nets, if you like. Go and do some fishing with these nets. That's what we're
Mm-hmm.
trying to do, really.
Absolutely. And it's pretty funny because like the over the course of uh even across like the entire price history of crypto, Bitcoin, a lot of like over time, and you see it, it's like you see it from one cycle to another, because that's really what determines like, okay, like this person, managed like their money well during a long period of time. Like they have a good plan in mind as far as like growing their wealth. Because most people, it's pretty funny. It's like they get in at the market at an earlier time, and then a couple of years later, it's like, okay, like you have less now than you did back then, and there's like certain unhealthy habits that people tend to develop, or they're trying to like trade to like, let's say, increase their stack. Like even one of the things that I've like when I looked at, let's say, portfolio distributions, like one of my recommendations at the time was like 80, like this is during, at least like during a bull market, is like you have 80% in your core positions, and then 20% perhaps you can mess around with and try to like trade in the market. But I ever since then, I'm like, why even bother doing that with that 20%? Just like put that, because statistically you're going to end up losing anyway. Like it's not even worth pursuing for most people. It creates a lot of like unnecessary stress, and it's like, if you don't know what to do with that 20%, just put it into like stable coins, collect yield on it, and then just rebalance like 80% of your positions. Perhaps you want to go heavier in stable coins. There's certain I have my personal, like I call them like almost like golden ratios that I kind of make sure my portfolio is in at all times. Like it's 70/30 for me is like risk on, where it's like 70% in crypto, 30% in stable coins. And then when I start to wind down, I basically go either by the 60/40 or the 50/50 rule, because I know that the 40% or the 50% I have is float on the sidelines. At some point I will see an opportunity where I can allocate a small percentage of that, and then have, let's say, those opportunity, like have an opportunity for an outsized return. But it takes time, it takes patience. It can take perhaps years to identify those opportunities, but they do come in this market. And it's as Kevin was mentioning, like this is a generational opportunity, and so many people today still don't even really understand crypto. There's still a lot of kind of emotional trauma just by hearing the word crypto, where they think like money laundering, or it's the planet's problems, for like it's like an energy crisis or something like that. So this is asymmetry right now in general, in terms of setting yourself up for this generational wealth. So I agree with Kevin's points. It's like, why waste that doing poor decisions and unhealthy habits, when you have the opportunity now to start building up and practice certain techniques that you can live literally what you preach, and then give that value and knowledge to somebody that can also make use of that as well, so that they too can earn some of that generational wealth over time. So yeah, every single, I would say, well, I'd say the vast majority of the instances I've seen with long-term holders that end up with reduced positions over time is just they get caught up in the volatility. They'll do like buys and sells, so they'll get shaken out of the market because of the volatility. Then they'll buy back in, again higher, and then it's like, all right, well, now like you have less coins, and then if the market tanks again, you're going to sell your position again, and then it's this bad, it's this very bad habit a lot of people can kind of get into. So yeah,
If you
stable.
just look at it from a revenue stream, right? If you just
Yeah.
look at the revenue stream, you're like, let's say you've got like 2,000 a month, right? Revenue stream.
Mm-hmm.
If you're like taking something away from that revenue stream, so you're basically reducing my income now, it better be a good purchase,
Mm-hmm.
right? This is the way I look at it. I don't want
Yeah.
to, like, so for me, I fixate on that number a little bit too much. So I don't
Mm-hmm.
allocate as much as I probably should in bull
Mm-hmm.
scenarios. But
Mm-hmm.
for me, it basically is a sanity check. I'm going to like
Yeah.
take my income and reduce it. So it better
Right.
be like amazing what I'm going to like invest this
Mm-hmm.
in. And that's the
Mm-hmm.
criteria that we should like apply to like when we're going to do things. Instead, we
Mm-hmm.
just click buttons, oh, bum, 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 like a casino, like,
Yeah.
like, oh, just buy some of that and some of that. And we're really not thinking critically about like
Mm-hmm.
why the allocation, what's the story, where's
Yeah.
the where's the growth going to come from, where's the money going to come from in the network, where are the users coming from. So this is what it does. It trains you into this mindset. Like, I'm not going to reduce my income unless it's like a real opportunity to increase my income, and it better be a good one, right? Like you
Yeah.
say. So I think
Right.
me and you do a lot less, but our end result is actually a lot more because we do
Mm-hmm.
just like keep ourselves intact. We're always steadily growing. Our portfolios never come back really. It's only up only
Mm-hmm.
most of the time. Even just for yield, you can generate a good up only position. And then we do take, speculative small plays on the side, which
Mm-hmm.
1 to
Mm-hmm.
10% of a portfolio is a massive growth.
Yeah.
So I think, yeah, like this is the way. And I think, you know, I even get, I get it if someone's got $1,000, $2,000. I know
Mm-hmm.
that's a lot of money to some people and they want to gamble with it and
Mm-hmm.
they're 18 years old and they think they've found something cool. Then I get that, right?
Mm-hmm.
That's, you know, they can recover from that situation. I'm not saying that should be done, but
Yeah.
I understand why someone would do
Mm-hmm.
that. But if you're like 40 years old, 50 years old, like you don't want to be recovering anything because you're basically
Mm-hmm.
gambling with your retirement. So,
Yeah.
um, you have to make sensible decisions. And most people
Right.
out here are like 25 to 35.
Mm-hmm.
So like 35, you don't really want to be like, you don't really want to be
Yeah.
jeopardizing
Mm-hmm.
working for the next 20 years. You want to be
Yeah.
like on the way out by the time you're 40, to be honest, with
Right.
this corporate world these days.
Absolutely. Yeah. The age aspect of it super 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 critical as far as how much money the person puts in the market. Because you're right. Like if person's been working, let's say you started working just out of college. You're 22 at the time, or maybe you're even 20 years old at the time. You've been working for 15 years. It only takes one bad move in crypto to lose 70 to 80% of that, and then it's just the whole thing. It's really hard, I guess, for somebody starting out. I guess there's kind of this mentality that they have to like roll all of it in because they're going for the jackpot. But I guess a lot of people need to even realize, as even as Kevin was suggesting, is a little money goes a long way in crypto. Like the upside potential is to the point where you don't have to take on this unnecessary risk in the market. And that's why I have a lot of respect for Kevin, and then top analysts in the market that respect the circumstances of all the possibilities that can play out in practice. Because most people project in absolutes, and coming from an engineering background, I know like there's absolutes, and then there's probabilities, and I look at things more in terms of a surface area, and kind of think of things where I'm basically putting my multiple points spread out so that I'm covering all the possibilities. And that's a big part of, I know what, Yieldlabs is very, very smart. There's a lot of very talented people in there around Kevin, and just the work that they're doing with the stables, and any opportunities for yield generation in the market without having to take on this the unnecessary risk that a lot of people um, from the get-go, they look at it, they look at the absolute scenario, and then You know, if you just plan, it could take like 6 to 12 months of planning, but eventually you will start to make very big wins in the market without having to take on that risk. And certainly a lot, and you can get basically revenue streams to do that with some of the work that's going on around Yieldlab. It's substantial. Like I you know, I read the articles, I look at, here's how much stables I have on the sidelines, here's how much I can generate using these stables, and if I want to, I can reinvest these into things that I see potential potential upside on. But even for somebody getting in the market today, like I think a lot of people also need to consider that anybody that's getting in the market today simply isn't going to get anywhere close to the same upside anymore that a lot of people from 2018 and 2019 got when they bought stuff for pennies on the dollar at the time. Like that huge massive upside isn't, it's not quite there anymore, in my opinion. Like you can still make some upside, but also, you know, the last few X's, the last 3 to 5x in crypto is actually, that's where stuff gets extremely risky. Like a 3 to 5x in crypto, once you start to get in that range, like the risk levels start to get very high. And that's where, you know, people come in with the expectation of hitting these like higher multiples, but they're getting in at, first off, the wrong time of the market, and picking the wrong tool. It's like they have these tools in front of them, they pick up the tool, and then they end up basically, it's like basically somebody picking up like a chainsaw without knowing how to use it or
Yeah,
something like that at
without
the
the
wrong
handguard
time.
on it.
Yeah.
Without the handguard on it, yeah. So like a
Hmm.
no safety switch. So yeah, like
Yeah.
you know what's ironic these days? Like I think the multiples are still there, but I think they're only
Mm.
there. Like I see a lot of like via like early seed opportunities, and that's kind of
Hmm.
that's why we put a wrapper around what we're doing,
Hmm.
just to kind of
Hmm.
get our community some access to these early seed deals.
Hmm.
Um, Basically share these with our community. We share like what we're doing, and or
Hmm.
you know, not none of it's financial advice, but just that ideology on kind of, and then stable coins as well. You can actually farm
Hmm.
a lot of these early offerings now. They're not being done through ICOs and stuff like this and IDOs.
Hmm.
They've been done through mining via stable
Hmm.
coins, right? So
Hmm.
that adds
Hmm.
liquidity to the network. It
Hmm.
has a vesting period and all this stuff. So using stable coins, you can actually create, and then you get your stable coins back at the end. So you're
Hmm.
like, yeah, you give up the yield, but you farm in a massive position in these coins. We
Hmm.
do stuff like this where we try and pool resources and get bigger pools, all these things, right? So that's the irony. You're not actually taking any risk, really. You're not losing, you know, your portfolio value or a potential revenue stream in the future, but you're actually generating really high multiple potential positions. But I
Hmm.
agree, as the market goes on, and there is vesting periods and lock periods on some of this stuff, so you have to be very careful, and our expectations have to go down in
Hmm.
terms of what we will get back, because I think it's, yeah, it is what it is. It only lasts as
Hmm.
long as it lasts in terms of the cycle, and then the real opportunities are in the bear market. So people
Yeah.
should be excited for that too. So I think
Hmm.
this is just a great time, and we're all learning, and there's a lot of optimism. More up before down, probably. You know,
Hmm.
overall, I would say.
Hmm. Hmm.
Um, before, you know, in the next 12 months. But
Yeah.
let's see. And I think it's really good time to be alive, get learning how to
Hmm.
do this stuff. And
Hmm.
worst case, just control your emotions and just stop trying to hit these massive numbers. And you'll probably end up doing pretty well if you put yourself in a network of, like, you know, Patrick's network or our network or whatever other network you want to join. We'll all collaborate together. And this is what we never had as like, it's why we became good at what we do, because we
Hmm.
basically had nobody to help us. We had to be self-sufficient. So now all of the new participants, they get this knowledge,
Hmm.
which is amazing.
Hmm. Absolutely. And yeah, the like the market itself. So, you know, as far as like the baseline assets. So when I look at something like Bitcoin and Ethereum, I agree with like Kevin's points that there's like over the long term of the market, I definitely think there's, you know, the upside when it comes to, you know, Bitcoin, Ethereum. There's gonna be definitely opportunities that come up in the market. It's, you know, when I look at, for example, something like Ethereum, because realistically, and I'm going for like a maximum, you know, bull case here. I'm not giving financial advice if you're buying Ethereum at like $3,000 to $4,000, but so far it seems to be following like the trajectory at least Bitcoin did during its prior cycle. So if that did map over, you know, you could end up with like a $10,000 plus, like not financial advice, like for Ethereum, but in that case, like even if you consider the upside on ETH, you know, I just kind of have my frame of reference during those troughs in the cycles, and that's really the time where I think a lot of people it's trained to basically buy, you know, allocate positions during the troughs, and then that's where, you know, those outsized gains end up happening, where, you know, you allocate a percentage of your overall holdings. You don't have to roll all in, and those troughs is where the outsized returns. And I can, again, I even can speak from this from specifically from outcomes like Hex, for example, which I think there's a lot of people that are very fortunate to have been following Richard Hart during the previous bear market, because he's had a ton of experience in the market, and that's basically one I'll you know, I'll be closely following, regardless of basically what's going on. But you know, even in that example, like it was a small percent allocation at the time, and that opportunities, like they do come again. It's just the patience aspect of it, and then being ready and prepared, and actually having capital when the opportunity comes, because oftentimes people end up they can end up in a situation where they get wiped out, and then they no longer have the capital that they once had that they could have reinvested in. And that even go back to the case where, you know, Kevin mentioned, you know, there was investors that had millions of dollars and then losing, you know, 70% of it. You know, that 70% is now opportunity cost that could have been reinvested, or just even a percentage of that, even a 25% of that 70% could have been reinvested strategically at some point in time, and then that could have been an outsized return. But now that economic energy that is gone, and it's just having to rebuild from that can be very difficult for people psychologically if they're always constantly in 100% risk on positions at all times.
No one talks about that. Like nobody ever factors that in. It's like when we do like risk analysis and like calculations on what's right and wrong, nobody ever factors in emotions. And it's like, how have you not factored that in? Because that's like the whole point of what you're trying to do is to get the money to like have a better life, and then you're actually making your life worse by doing what you're trying to
Hmm.
do. So it's
Hmm.
like you need to factor that in, like that emotional factor. And look, a lot of men are emotionally void, and they're not in touch with their emotions because they're not supposed to be, because they're men and they want to be tough, and they're like, yeah, I'll just press the button, it's not affecting me. Yeah, of course it's affecting you. You're lying there at night, you're not thinking straight. Now you have to like trying to catch up with what you did because you did the wrong thing. And now you're like getting grumpy with your wife or whatever and your kids because you like,
Hmm.
you know, you're
Hmm.
under pressure and all this stuff.
Yeah.
So you have to factor this in, this emotional
Mm.
factor. And this is what I always try and factor in when I work with clients, the emotional factor. So I'm always trying to
Hmm.
keep them emotionally sound, like
Hmm.
in terms of like what they're doing. I'm like,
Hmm.
this is a sound decision for you. I believe, you know, it's up to you, do whatever you want. But this is kind of like, I think this will make you sleep well at night. And I think
Hmm.
you can, you know, this is your outcome guaranteed, and you can do this, and then you've got this to do something with in the future. And they're like, oh wow, yeah, I feel a lot better now already. And it's
Hmm.
just like that's the whole point of why you came here, to feel better, and you actually
Hmm.
feel worse.
Hmm.
So
Yeah.
you know, like this
Yeah.
this is what we need to people just it's just irrational. The whole
Yeah.
level of education and level of professionalism in this space is
Hmm.
irrational. So just try and like work with people like yourself, and just just to add some value, and basically, and some thoughts that people can kind of think, okay, yeah, I like that, you know, that I can apply that to whatever I'm doing. It's not about telling
Hmm.
people what to do. It's like,
Hmm.
because everyone needs to be individual, and me and you never have ever discussed our holdings really in terms of percentages, or like shown each other, or you know, I know kind of some of the projects you're in, and you know some of the projects I'm in, but it's like we don't really care. It's like as long as we're
Hmm.
okay, I'm like, are you okay? Are you doing okay? Yeah, yeah, I'm fine. Yeah, all right. So that's all we really care about. So
Hmm.
it's like you do
Hmm.
you, I'll do me. Someone else does whatever they want, but it's kind of taking the best bits of everyone and kind of just building like a nice, well-rounded approach is kind of what I try and help people do.
Hmm. Yeah, that makes absolute sense. And that's going to be very empowering for a lot of people. You know, you're people are going to look back basically over, you know, a 2 year, 3 year period, and they're gonna see the difference. They're gonna see, you know, them versus others in the market. Because, you know, the other delusion I think a lot of people have is it's everybody goes back and they looks at the market, and there's always going to be the perfect play that exists. There's always going to be some kind of perfect play. Like, that's just how hindsight works. And it's very easy for somebody to go back and look at the perfect play because it already happened. But the reality will always at some point give you the perfect play. But in the circumstance, like the probability of, like, let's say, getting that perfect play is like, it's, I just kind of look at it as almost like a scale where, okay, you're going for the perfect play, your risk level's at 99%. And then it's like basically dialing it in. Most people get wiped out trying to go for those perfect ideal scenarios that are really a fantasy. Like and again, I just have this from like an engineering background. Like I remember physics problems in college that give you this perfect scenario that doesn't physically exist in real life. Like engineers that design products, there's all sorts of other factors that they have to kind of design around. They're essentially designing systems around various sets of probabilities that could happen, and there's still even inherent risk in the products they're designing. There's still these low chance uncertainties that could end up playing out, but they're factoring in, the probabilities and designing around that. And then the good products that end up being successful have very good implementation and design around the probabilities that could exist with whatever system they're designing for. So, and then the cost aspect of it is, okay, how much capital are they investing into this product and things like that. So it's that whole investment mindset. It's so important. There's so much good knowledge, specifically with Kevin and Yieldlabs. There's a really great community there. So I'm very excited to work with Kevin, with Yieldlabs, with some of the communities and overlapping. So this is going to be we're still in the very early stages in the grand scheme of like cryptocurrencies and all the opportunities that are going to come. But I would highly suggest, like, again, guys, the links to all this social media outlets that Kevin has built up over the last couple of years, these are going to be posted. I highly suggest joining in on those. There's very smart people in there, and it's a very different group of individuals than the typical you click on a YouTube video and they're pumping some random coin. Like you don't have to, this is a very this is a very different group where it's people with experience that have an investor mindset for growth long term. So definitely something I
we're basically, everything we do is free content. It's a disruptive model where we basically work with higher net worth people and we kind of assist them with what they want to do. So we generate income that way. And then like via the community, we don't generate any income really. But what we do is we kind of passively put in back in what we generate to basically fund the community and to hire people from the community and to like get people running this ecosystem full time. So like we're not directly taking profits, we're just taking like money off the richer people, putting it back into the poor people, creating this big community where we can basically offer free content 90% of the time. If people want one-to-one time with me or some of the team, then they obviously pay for that, but most of the time you shouldn't need that. And if you do want specific portfolio questions, then there's people that are willing to answer those on a one-to-one basis. But so it's really cool model, and we just try and get like unbiased opinions. We don't charge platforms or services or companies when we talk to them. We just do it for free because we think they're good companies. We try and get deals with them to like help our community, basically just discounts on their products for doing their thing. So it's all like a giving back model, and then we all end up doing really well in the end because the platform gains traction. We can access bigger influencers and people in the space, and then we're going to like monetize the way we work with businesses because we have so much business experience. We have the co-founders basically started up multiple businesses. We have data analytics arm, we have a research arm. We have many different skills in house that we can offer to crypto companies to basically upskill their crypto companies, help them build their communities, build in what they're trying to build, and then basically and all that revenue comes back. We can get people paid full time, and then it's just like a awesome ecosystem where everything's disruptive, and the other way around to what everyone else does it, where they're charging you $10,000 to make a video, to say, oh, buy this thing. We're like, no, we don't pay us anything. Just give us incentives for the community, and we'll just drive our community towards it because we think it's awesome, and then we get paid other ways. So it's kind of, people ask me like, where's the catch? What are you doing? I'm like, because we're all doing really well ourselves and we're practicing these techniques. It's kind of, that's our base revenue. Anything else on top is additional. So yeah, it's really cool to have you on board. And there's like a panel of about 8 of us and different people involved, and anyone's welcome to join. If you add value, you can join the panels, you can join the speakers, you can come and join the community, come and just get involved, basically.
Absolutely. And and then I guess what I'll do is just so everybody can know where to, I guess, reach out to you on social media outlets. Is there a preferred place you would have perhaps users or new individuals connect with you on social media?
Yeah, so you can check my social medias out at crypto_flipping. That I kind of keep that handle just because that was the old naive me, where I used to like day trade and do all stupid stuff. I don't really flip much crypto anymore, but yeah, it's crypto_flipping is my personal one. You'll find Yieldlabs through that, or you can go on the at Yieldlabs Twitter. That's a good place to start. We have our own Telegram. You'll find the links on the Twitter. Reach out to the and the DMs. If you can't find the links, we'll send you the Telegram groups. You can join those for free. We have YouTube channel as well. You'll find all those links through the Twitter. So just head over to Twitter, start there, and then or search Yieldlabs on YouTube. And there's plenty of content there. We do community calls bi-weekly where you're welcome to come and join, webinars, ask questions. We do recorded sections, unrecorded sections. So you can basically just come and ask us direct questions after, like unfiltered. And then if you want to just watch the recordings back, you can do that too on YouTube. So multiple options. We're going to do more streams, do more stuff like this, working with more companies. We've just done interview with a company on tax advice, and we're going to be doing just upskilling and bringing like quality content basically, and it's going to be like best in class content just because of the professionalism that we bring, and we're just trying to make it very polished and not just jump cutted videos and rubbish. Really, we really want to make this a good offering to all the communities.
Yeah, absolutely. And for anybody that finds this, the link to this podcast or video through any of the social media outlets, the Crypto Flippin's Twitter is tagged on there, as well as links to Yieldlabs on Twitter, as well as Telegram. There's a very active community in Telegram that comes from all kinds of backgrounds in cryptocurrency. So it's really good for it just gives a nice, credibly neutral approach to the market instead of picking absolutes, which is I always vouch for. Always have a credibly neutral mindset, because that gives you opportunity to adjust and adapt to the conditions of the market and the realities that end up changing over the course of time.
And it filters out all the people that don't want to be in an all-inclusive community too, right? So everyone who's just bag holding whatever they want to bag hold, or they like whatever they like, you're entitled to do that. That's completely fine, but you stay over there, because if you want to have all-inclusive conversations, open-minded, let's get some data out if we're going to say things, and get a data set out and analyze things properly, rather than just opinions on what's good and what's not. And we're building it step by step, tutorials. So all-inclusive. If you want to come, just come. We talk about all platforms. And we like liquid funds. We like investments that are easy access, no fees, just anything really. We're open to any discussions on any type of real yield bearing opportunity, or opportunity just to increase the portfolio in a sustainable way.
Absolutely. And what's very underappreciated right now in the market when it comes to, let's say, the tools that are available. So since crypto is a very it's still a relatively early asset class, even though it's been here for a little bit more than a decade now. But in terms of, like, let's say the tools that end up existing, there's not any specific standards that are set, but I know that Kevin and those that are involved specifically with Yieldlabs, those are the people that actually end up setting like bars and expectations later when it comes to actual quality that's being delivered. So there's it's an early industry right now, and I think a lot of people, since they don't necessarily know where to access certain tools, it's very hard. But this is certainly a place to reach out, learn, and become familiar with actual tools that, in my opinion, have a high likelihood of becoming baseline metrics for users and investors as this asset class continues to grow. So what I'll do is I will for any future streams, like Kevin is always welcome on podcasts, YouTube, and this has been a really good podcast. I'm really glad that you definitely appreciate any time you took out of your day to join this call. It's been really good catching
No,
up.
I miss it. I miss it, man. Like we had good times back in the day. We had lots of,
Mhm,
I don't know how many hours we spent talking, and especially with DCC, we did lots of good. My favorite one was that one we did, four of us, me, you,
mhm,
DCC, and Plan C. We did that like Cell one ages ago. I just love that. I got like good memories of that. Were kind of where I was at the time, and just
mhm.
kind of like that chat. Really liked it, and I think that's the one you referenced before, where I said about this double market cycle. I said
Mhm.
that this is probably going to happen. And a few people
Yeah.
listen to that and have said to me, like, Kev, you're the only one that said that. So, like, we get things right, we get
Mhm.
things wrong.
Mhm.
So, yeah, I'm glad we've started these conversations up again. And yeah, let's just keep working together. Thanks for popping in our stuff. You're part of Yieldlabs too.
Mhm.
And hopefully I can be part of your community too, and we can just work together.
Yeah, yeah, absolutely. And for anybody that's listening in, so you have full access to all of Kevin's social media outlets as well as Yield Labs, and we will see you guys in the next podcast. Take care.
Thanks, everyone.